Hi, this is Jerry Pratt with Clearwater County, and here with Jeff Hartling for Town and Rocky Mountain House. We had the opportunity to sit down with Mike Stannix from Stannix LLP, accounting firm here in Rocky Mountain House. Talk about doing business and things that accountants want you to know about in the time of COVID-19. This is a part of our ongoing series of asking local experts. So we've already spoken with Rocky Credit Union and Michelle Andershak and a few individual local business owners about life doing business during COVID-19. And we intend to do this for a little while. So feel free to go check out our other videos. But for now, we're going to talk with Mike Stannix about what accountants want you to know during this time. Welcome, Mike. Glad to have you here. Jeff and I are talking with Mike Stannix of Stannix LLP. Can you share a little bit about your background?
Sure, Jerry, I'd love to. So I'm a chartered accountant and a chartered professional accountant. Started my career in Edmonton and Calgary doing tax planning, international tax planning, and accounting services for small and medium-sized businesses. And then made my way to Rocky Mountain House about a year and a half ago. We opened up an office here in town. And meeting a lot of people in the community. It's great to meet everybody, and so now we're dealing with all these COVID-19 measures, and thought we'd give some advice out there for businesses to help them.
Okay, well, we have a few questions for you, and you've prepared some material. Jeff and I will take turns asking those, and I think I get to go first on
Sure.
What accountants want businesses to know during COVID-19. So, what advice do you have for small businesses they're struggling to meet their financial obligations?
Yeah, I think this is a question, Jerry, that a lot of smaller businesses are facing right now. When you look at the average small business, their top expenses are going to be, products or supplies, rent, payroll, and taxes. Those are typically the big areas that businesses should be focusing on at this time, and often create a lot of cash outflows out the door. During all these COVID-19 measures, issues, the shutting down of some businesses, I think it's important to kind of keep your finger on the pulse when it comes to the business's cash flow. A couple of thoughts on this. Some of our clients are going back to the drawing board, and they're dusting off those old contracts from their suppliers, the old rental agreements, and they're going through them one more time to make sure that there's no clause for extreme circumstances or something like that. So that's kind of a good thing to kind of start with. The other thing businesses should be looking at doing is opening up a dialogue with these suppliers or landlords if they haven't already. You want to see if they're open to negotiations to either reduce or delay payments. That'll put cash in your pocket immediately as a business. But before you go down that path and open up any of these negotiations, I think it's a really good approach to make sure you understand as a business exactly what you can afford in these situations. In these instances, a cash flow projection is quite helpful and quite useful in mapping out kind of the cash inflows and the cash outflows of the business in the next week, 3 weeks, month, 3 months. And so you kind of want to know where the cash position of the business is going to be at all those intervals, because that'll give you better information about what you can afford going forward and how you want to enter into these negotiations if you're able to. And then while you're negotiating, you want to try and make sure that you're documenting as much as you can, documenting the discussions and then the key decision points, what you're going to pay and how often you're going to pay it. We have actually had some clients access what's called business interruption insurance. Some commercial insurance policies provide for business interruption. The feedback that we're getting from some of our clients is that a lot of these insurance companies are not allowing businesses to access this because there has to be some kind of physical damage associated with accessing that part of the policy. But the important takeaway here is that if you haven't talked to your insurance provider, it's a good idea to reach out to them and kind of assess what's available under your policy, and at a very bare minimum, make sure that your commercial policy doesn't lapse during this time if you have closed your doors or if you've stopped making premium payments. a lot of insurance providers now are realizing that it's important for them to be flexible in their premiums. And so we are seeing some insurance providers providing a reduction in the premiums, or in some cases a refund of past premiums, in order to help these clients out and keep their best interests in mind. You know, I'm not going to go into too much details on the CEBA loan and the credit availability programs that are there, because I'm aware that there's another webinar from the bank which kind of focuses on this. But I will say this about the CEBA loan. We have had some clients that have had troubles accessing it because they haven't quite met the minimum of the $20,000 payroll requirement in 2019. In these situations, we've had just a handful of clients reach out directly to the CRA. They've contacted them and have been 100% transparent with the CRA, informing them that their intention is to go back and change some of their past filings in 2019 so that they can change the character of the payments that are made to them as shareholders from dividends to salary. And the CRA has been 100% open to this idea, and they've been compliant with these select clients that I'm speaking about. This has allowed them to access the CEBA loan when they wouldn't have been able to in the past, and it has allowed their business to survive. And so it's been a really big deal for these specific clients. And it's nice to see that the CRA is cooperating with small businesses who are trying to do all that they can to manage their cash flow during these difficult times. The other thing I want to maybe mention about the CEBA loan is the use of the funds. So, you know, when you get those cash funds, it's important to remember that there are requirements placed upon the use of those funds. So if you have availed yourself of that loan, you want to make sure that you're using it to help cover operating costs, broadly speaking. You know, if the government has specifically restricted the use of these funds for things like paying dividends, refinancing existing debt, or increases in management compensation. So if you have availed yourself of these funds, just try to avoid those types of transactions, because the CRA could look badly upon that or frown upon that. Another measure that is kind of important to understand if you have significant rental payments and you're in a position where you're struggling to make rent. Other than negotiating with your landlord, the government has announced the Canada Emergency Commercial Rent Assistance Program. And that was announced on April 16th. And the basis of this program is that the government will give a forgivable loan to the commercial landlord to cover 50% of the rent payments that are due to be made by eligible small business tenants. And so how it works is the landlord has to enter into an agreement with the government, and that agreement places certain terms and conditions upon the landlord. But in the end, what ends up happening is the 25% of the rent is covered by the landlord, 50% is covered by the government, and then the remaining 25% is covered by the tenant. And in order to be eligible for this, you have to, as a small business tenant, pay less than $50,000 a month in rent. And you've either temporarily closed your business due to COVID-19, or you've experienced at least a 70% drop in pre-COVID-19 revenues. So the application process hasn't been fully released yet, and we don't have a lot of details on how it's going to be administered and the procedures and penalties associated with this program. But I think that's something that small businesses should keep an eye on if they're concerned about meeting rental obligations as well. And then kind of lastly, I'll just chime in a little bit for the farmers out there. So, you know, there's been an increase in funding from the government to Farm Credit Canada, which provides credit to farmers and the agri-food sector. So if you're a farmer with an outstanding APP loan, which is due on or before April 30th, you'll have an additional 6 months to repay that loan. And then also there's additional interest-free loans with the opportunity to apply for an additional $100,000 on the interest-free portion of that loan for the 2020-2021 years, as long as the total APP advances to that particular farmer is under $1 million. So kind of just to sum it all up, there's a lot of options here for small businesses if you're feeling like cash is tight. But I think the key takeaway from all of this is to make sure you have a good understanding as a small business where your cash flow is going to be in the next week, 3 weeks, 3 months, and making sure that you have a proactive plan to stay on top of your cash liquidity.
Okay. What options are available to business owners that are concerned with the financial well-being of their employees?
Yeah. And I think it's important for businesses to realize that there's quite a few programs that are available to the employees as well as the employer. There's a lot of hype lately in the media about the wage subsidy programs, and you have to understand these programs have been rolled out very quickly, and so in the case of the 75% wage subsidy program, it can be very complicated to work through the mechanics of that calculation for when you're applying for the wage subsidy. But nevertheless, it's there and it's available to small businesses to help them in these situations. If you have employees that have been laid off and they haven't availed themselves of the CERB benefit, I would recommend advising them to kind of look at that closer and make sure they're eligible for that before they apply. But that can be a short-term measure which can provide a lot of relief instantly to those employees. In situations where those employees have not been laid off and the business is looking for relief, the first place to kind of start and look at is the 10% wage subsidy program. And so under this program, it's a 3-month measure which allows eligible employers to reduce the amount of payroll deductions required to be remitted to the CRA. And so in reality, you don't have to apply for this. You don't have to wait for the payment to come in the mail or to be directly depositing your bank account. It's instant cash right away because it comes right off of the payroll deductions. The downside of this program is there's not a lot of money available to employers. It's 10% of the wage, and there's a maximum cap of $13.75 per employee. So once you hit that maximum on that employee, you're kind of done. And you have to make sure that you're making payments to eligible employees. And in order for that employee to be eligible, they have to have received compensation for at least 14. There can't be a 14 consecutive day period within the eligibility period that they haven't received remuneration for their employment. So there's a couple of tests to watch out for this. But in essence, if you're an individual or a partnership or a non-for-profit organization or a registered charity, or you're a Canadian-controlled private corporation, which is eligible for the small business deduction, then you should be eligible for this program. And if you're watching this and you're thinking, well, I missed it for March and I want to apply for it now, don't be too concerned about that, because there is an opportunity for you at the end of the year to claim back any amounts under this program that you haven't claimed yet. So that's still available for you at the end of the year. Now, the bigger program that a lot of people are really interested in, and there's been a lot of focus and attention on in the media as well as with a lot of small business owners, is the 75% wage subsidy program. So when the government announced this was kind of a big game changer for a lot of businesses. A lot of businesses that were looking at laying off employees have now kept their employees around. We've seen a lot of our clients that are keeping their employees employed because of this program. And essentially this program is designed to cover 75% of an employee's wage up to a maximum of $847 a week. And it's for employers of all sizes across all sectors. The only thing that the business has to demonstrate is that there's been a 15% reduction in revenue in March and a 30% reduction in revenue in April and May. Now, to calculate that, it's a bit more complicated, but I'll just mention here on the video that there's 2 benchmarks that you can choose from. You can either choose the corresponding month last year to measure the reduction in revenue, or you can choose the average of January and February of this year to measure the reduction in revenue. So if you get to the point where you've calculated that and you feel like you meet the test, and you can demonstrate that based on these calculations, then the program is available to you from March 15th until June 6th. That's the dates that they outlined when they originally announced the program. But I think about 4 or 5 days ago, the government just announced that this program could be extended throughout the summer as well. So if you're a small business and you're struggling to meet payroll obligations, these are definitely two programs that I would recommend looking closer at and making sure that you're availing yourselves of those. The unfortunate part of the 75% wage subsidy program, it is a complicated calculation and it does require some support when you're doing it. And the CRA has indicated that they will be following up on these applications, and they will be, there's a good chance that there's going to be auditors assigned to specifically targeting companies that have availed themselves of these measures. I guess the other important thing to consider as a small business is if you decide to avail yourself of the 75% wage subsidy program, there is a mechanic which lets the CRA publish your business to the public as a business that has taken advantage of this program if they choose to do so. So just know that you're kind of opening yourselves up to more transparency to the CRA as a business, and if that's something you're not interested in, then you may want to look for other alternatives. But I mean, 75% of gross wages can be significant for a lot of small businesses. And then finally is the federal work sharing program. So this, I don't have a ton of clients that are using this program. It's usually businesses that have used this program in the past. This isn't a new program. They've just made changes to it to make it more easily accessible to small businesses and employers of all different sizes. But the way this program works is you would reduce the amount of working hours that an employee puts into their services within your company, and the offset of that reduction would be covered by EI. And so basically what ends up happening is the government is paying for part of the wage and the time, and the company is paying for the other part of it. You know, usually the question comes up, well, how much hours of an employee's work schedule can be reduced and how long can it last for? And so in order to be eligible for this program, there must be a reduction of a minimum of 10% or a half day and a maximum of 50% or 3 days a week. In any given week, the work reduction can vary depending on the available work, as long as that work reduction is on average between 10% and 60% for the whole duration of the program. And then the program itself must have a minimum duration of 6 weeks, and as a result of COVID-19, it can last up to 76 weeks, whereas before COVID-19, the maximum was 38 weeks. And so here's another option where if you're a larger, medium-sized company and you have quite a few employees, this is kind of an interesting program where you can move work around and keep more people employed while accessing the EI program as well. And it is working well for some of these medium-sized employers as well. So I mean, you look at these kind of three major programs here, and there are some options for small businesses that are struggling to meet some employment payroll obligations and things like that. So.
Okay, so there's quite a bit out there, but it does take some looking through to make sure you're qualified for something.
Yeah, and the challenging part with all of this is, like I said at the beginning, these programs have been rushed out, right, by the government. And so the legislation behind them is confusing and complicated to work through, and there's a lot of rules. The one thing I didn't mention is that, if you do take advantage of the 75% wage subsidy program and the 10% wage subsidy program, the fact that you've used the 10% wage subsidy affects how you calculate your benefit under the 75% wage subsidy. And it's not necessarily a calculation involving how much cash you've received, it's what you're eligible for. So even if you technically haven't received anything under the 10% wage subsidy program and you apply for the 75% wage subsidy program, if you're eligible under the 10%, you still have to consider that in your 75% wage subsidy program calculation. So there's a lot of back and forth and circular calculations there, but I recommend getting advice if you're going down that path, because this is something that you're effectively filing with the CRA. You want to have somebody competent looking at that and making sure that it's done correctly. So.
Okay. Now, you are dealing with the CRA in some of these programs, and businesses, tax is always an issue. So when it comes to tax during COVID-19 and all these changes going on, what should business owners be thinking about?
Yeah, there's quite a few things that, there's a lot of tax measures in the last couple of years that have come down the pipe from the Liberal government. Everything from the TOSI rules, tax on split income rules, to restricting payments of dividends, which is under the TOSI rules. We have to be careful here, because with all these new rules coming into play and now the COVID-19 measures, there's a lot of things to think about. And so maybe just to keep it simple at first, right off the get-go, if you're making payments to the CRA, just know that if you have a payment owing that became owing on or after March 18th and is due before September 2020, you technically don't have to make that payment until August 31st, 2020. So if, for example, you filed your corporate tax return for 2019 and you have a balance owing, and your year end is December 31st, you don't have to make that payment until August 31st. If you're making your monthly or quarterly installment payments as a business, and those payments are due at the end of each month or at the end of each quarter, for the 2020 year, from March 18th to September 2020, those payments don't have to be made until August 31st, 2020. So there's a bit of relief here on the cash flow side, but I always caution my clients, if you're planning on taking advantage of that relief, just make sure you have a plan to actually make those tax payments on August 31st, 2020, because oftentimes what happens is businesses will end up taking that money and putting it somewhere else, and then it's not available to them when the time comes to pay taxes, and then you're into interest and penalties with the CRA and going down that path, which is not a pleasant path to go down. So that's kind of the first thing to think about, is that there is relief on corporate tax payments. The other thing is, on the GST side of things, if you have a GST bill that is due or becomes owing between March 27th and the end of May, that GST bill doesn't have to be paid until June 30th. So there's a bit of relief there as well. There is a lot of clients are incorrectly assuming that means they don't have to file their GST return on time. But I think the CRA has administratively said that they will not apply penalties to late file GST returns during that time. But it's also important to remember that if you're proactive about your cash flow planning and your forecasting, and you want to know what your obligations are going to be in the next 3 months, 1 month, 6 months, you want to file that GST return so you know exactly what the balance owing is going to be. And just to avoid any potential late filing penalties if the CRA decides not to honor that administrative position. Another thing, and I mentioned this a couple of questions ago with respect to accessing the CEBA loan, is compensation planning. So a lot of small business owners typically will just pay themselves dividends, and that's kind of the end of it. And that is effective, and that's the simplest way to do it. But if you're a small business owner and you've been kind of on the fence about how you should pay yourself, you want to be careful how you compensation plan during these times, because there's a lot of measures available. Granted, the wage subsidies would not be applicable to business owners who all of a sudden decide to switch to salary. That doesn't work. But if you're in a situation where salaries may make sense over dividends, or a combination of that, you want to carefully plan your compensation as a shareholder to minimize both the corporate taxes and the personal taxes associated with that compensation, and put yourself in the best position to make your business and yourself available to some of these programs that have been released to the public. So keep compensation planning kind of top of mind, and make sure you're having those conversations when you're doing your year end. Another thing to be aware of, there are a lot of businesses that are experiencing losses on a monthly basis, on a quarterly basis now, whereas before they were quite profitable. Basic loss utilization planning strategies are effective in these situations where you can carry those losses back and get some tax back quickly. The other thing to keep in mind is if you're an owner of more than one company, and if one company is suffering more than the other, there are some strategies that you can do to utilize the losses in one entity and apply them against the profits in another entity. So you want to make sure that you're considering those loss utilization strategies, because at the end of the day, they're going to save you on the tax side of things and keep more cash in your pocket for the future. If you've been in a situation where you've done estate planning and you've either frozen the shares of your company, or you're setting things up to do an intergenerational transfer of assets, all of these tax planning strategies require an estimate of fair market value of the business. I think it's important to remember that, we're in very different times now than we were a year ago economically. And so likely the fair market value of your business has dramatically changed. And so you want to reconsider what that fair market value is. And if it has significantly decreased, you want to be sure that you're talking with your tax advisor or with a tax advisor to make sure that your tax planning strategy reflects the appropriate fair market value of your business today. In some cases, you may have to take additional steps to update that tax plan for your new lower fair market value of your business now. And then lastly, I've had a few clients that are U.S. citizens living here in Canada. They have valid Social Security numbers and they're keeping their U.S. tax filings up to date. If you're in that situation, you can avail yourself of a U.S. program and claim the $1,200 a month, sorry, not a month, $1,200 total, U.S. $1,200 US dollars from the IRS. And so the only requirement for you to be able to claim that $1,200 US dollars is you just have to have a valid Social Security number, and you either have to have filed your 2018 U.S. tax return or your 2019 U.S. tax return. So if you're in that situation, I mean, these are programs available to U.S. citizens that are living abroad. You don't have to be living in the U.S. to avail yourself of this program, but I would recommend looking closer at that if you feel like you might fit into that bucket. And so, I've kind of thrown a lot of different tax things at you here, but I think the key takeaway here is watch what you're paying to the CRA, make sure it's what's required, and then kind of look forward and see, is there anything I can do right now to minimize that future tax liability? Is it compensation planning? Is it revisiting your estate plan? Is it availing yourself of an international tax relief program from the IRS, for example? So these are some of just the things that I would seriously think about as a business owner. So.
Okay. Jeff, you have the last question?
I do. Like, what are some practical steps that a business can take now to prepare for the future?
Yeah, I mean, a lot of these suggestions are going to come back to kind of my earlier comments. We talked about the wage subsidy. We talked about some of the important tax considerations to keep in mind, compensation planning, your estate planning. We've talked about cash forecasting to make sure that your cash flows are in a good spot. So all of these suggestions require a business to keep their bookkeeping records up to date. So that's kind of the basic starting point for a lot of businesses. If you're behind on your bookkeeping, I would recommend getting it up to date and then keeping it up to date. We don't know how long the government is going to keep pushing these programs. It seems like every day they're announcing a new program. But I mean, the key point here is that the economic fallout from COVID-19 could be significant, and it could go on for quite some time. And as a business owner, you just want to make sure that you are in the best position to make sure that you understand exactly what you need and if you're able to get it. In order to do that, you need up-to-date bookkeeping records.
I know the credit union said the same thing. Like, if people were coming in to talk about their loans or additional loans or renegotiating existing loans, they need to make sure they have current financial statements to help them make those decisions. Yeah,
and that's a great point, Jerry. Like, you can't get a loan without providing financial statements to a bank. Like, a business just will not be able to do that. I mean, the CEBA loan is the only exception where you just have to provide the T4 summary. But if you're trying to get true credit as a business, you need up-to-date financial statements. And and you need up-to-date bookkeeping records to produce those financial statements. So that's a good point. The other thing to keep in mind is you want to have up-to-date tax filings. If you're behind on your GST returns or your corporate tax filings, there's some unknown and questionable outlays that you're going to have there that you may not be anticipating as a business owner. That's probably the worst part of my job, is I have to tell people how much they have to pay to the government, and when they're not expecting that, it's not a pleasant conversation. So I like to keep my clients very informed on what their tax liability is going to be, and so they're always planning and preparing for it, and there's no surprises. And I think during COVID-19, and as a business, if you're struggling to keep cash in the bank, then a surprise is the last thing you want, especially as a small business owner on the tax side. So there's two other things I kind of want to mention. I've already talked a lot about it, but it's just doing that cash flow forecast. Very simple. Just map out what is coming in the door for cash and what's going out the door, and make sure you understand clearly all of the payments and receipts that are expected. And then the kind of last thing I'll mention, and I noticed on the county website actually that there's a lot of resources for business continuity planning. And so, this is a good thing for businesses to do, is make sure they have a business continuity plan. I'm not going to go into any depth about what that involves or what needs to be done there, but it sounds like there's a lot of resources, especially on your guys' website, about how to develop that continuity plan and making sure that that's in place.
You can find that on the Rocky Mountain House website as well.
Yeah. Just so many things the businesses have to worry about, and it certainly brings to the forefront the proactive planning and thinking ahead throughout this process. And not even just during COVID-19, but as they start to prepare to reopen and recover, what's that going to take? Because if they've honestly burned through their cash just to endure this, how do you buy new inventory or hire people again as you try to gear up and open the doors?
Yeah, and that's a good point. I mean, we just had a dentist that's a client of ours contact us, and as you know, dental offices around Alberta are now reopening, but they're reopening under strict conditions, which are set out by their professional body, and so the big question mark is, well, what kind of personal protective equipment are they going to require, and are they able to get that for all of their staff? And then there's the question of, well, are some of your staff going to feel safe coming back to work right now? And so you have to address that as well. So it's not going to be easy. And I think the more informed you are as a business owner, and the more you're looking at all of these resources, the better you'll be able to make some of these hard decisions in the near future. So. Okay.
Well, thank you, Mike. I'll try to do a quick summary. There's a lot of information here. So the things you've talked about are the importance of having financial statements up to date, especially with cash flow forecasting, so you can know where you're sitting. Being aware of the many programs that the government has out there. And there are qualifications, so you need to be aware. You can't just automatically get them. There are qualification processes. Planning for taxes, being aware that you still owe previous taxes, even though government has deferred payments, which is helping with cash flows. But there will come a time previous taxes will need to be paid. And then again, just planning for how are you dealing with this, getting your financial statements in order. Do you have an estate plan? Do you have to update your fair market value? And figuring out what are the impacts now that some businesses are opening, and there's going to be additional costs with that, right? Like new PPE, new cleaning procedures means new costs, and it's just always changing.
Yeah, I think you summarized great. So.
Thank you. Well, Mike, we sure appreciate this. There's so many different views to look at how COVID-19 is affecting businesses, but we hope this advice can help a few of them through and know where they should be looking and thinking as they plan for getting through this really tough part and getting ready to reopen.
Yeah, I agree. Thanks, Jerry.
Okay.
Thanks, Jeff.
Thank you, Mike. Well, thanks, folks, for tuning in and watching this episode on Financial Perspective with ourselves and Mike Stannix. There's a lot to absorb, and for further detail, you can go to our websites and find further information with Town of Rocky Mountain House or Clearwater County. If you're uncertain to where to find them, please do not hesitate to reach out by a telephone call as well, and we'll be happy to assist.
Thank you.
Thank you.